Today is April 13, 11:17 a.m. And we saw some unusual options on Best Buy, BBY, and wanted to show everybody and then also suggest a different trade idea than the one that we saw. So let's get right into it. First, we can see that the stochastic oscillator is oversold here. The current price is kind of near a support. You'll see here back in March 28, it was at support, came back to $79 and then came back down. So this has been a strong resistance. This has been a strong support. And so we're currently at support. So will it break down or will it bounce from here? And so if we zoom out, you'll actually see that in the bigger picture of things, Best Buy has dropped all the way down to 60 just in October. And we're here around this support level right here when it gapped up from this earnings call. And so now we're testing this area to see if it can hold again. So it has been strong support here. So let's take a look now to see what is going on with these unusual options we saw today. And here we are at 9:53. You'll see here that was a little bit about 90 minutes ago. You'll see here these 10,000 contracts for the April 21s and the June 16s. And if we dive a little deeper to try to figure out, well, what does this mean? We can figure that out together. So this is at the 75 puts. Then the Junes are at the 67.5 puts. So if we look at the April 21s, you'll see here these 10,000 contracts here at the volume. And we believe that this is actually a closing order where they had shorted Best Buy. And now that it is in the money, they are taking profits because it is below 75. It's at 73. And since this volume is less than the open interest, that's another reason why we think this is a closing order. And they're taking profits now. And then by taking profits, closing this order here, they are now opening up a new trade for 64 days later. And then buying the 67.5 puts. You'll see here this volume of 10,000 is greater than the open interest. So these are opening orders. And so they're continuing to short Best Buy and anticipating that in 64 days, within that time period, it will be below 67.5. And which is quite possible, as we talked a little bit about earlier, that it did drop down to 60. And so we did a slightly different trade because what they did was they bought this 67 here. We actually sold it, and because the volatility is a little higher because of all the purchases that was happening today. So we sold it, and we bought the September at the 75 strikes. So you'll see that here. This was our position. So we created a diagonal spread that was bearish, and so we can analyze this and show you what it is. This was our trade, and let's also put up their trade so you can kind of see the comparison between the two. They bought these 10,000 of these 67.5 puts. And so their trade here is just a single put here, going for 239, where it is going to profit as the price goes down from 73 and it goes above this zero line, which is the profit loss on the y-axis. And so, however, there is this negative 3 theta, and also that's something that we thought we could do something different to minimize our theta decay, because we don't know when this is going to drop, because earnings is still far out. If you look at the earnings date, it is all the way here in May 23. So there's more than a month away. And so this trade is possibly something related to earnings, because it does, June is after earnings, right? So we don't want to wait too long and the decay on the theta starts to reduce our cost basis, right? So this stock has to drop to 65. Here's the break even by expiration date for it to even break even, right? So instead of this unusual option trade that they did, we did a diagonal, and this is our trade here. And you'll notice that our break-even point is actually all the way at 74.93. So here, all the way up here is break-even for us. And so the stock can still even go up to 75 or so, and this is still going to be a profitable trade. Because our theta is actually positive. It's a 1 here. So we like that, the fact that this is a 1 here. We also like how the Vega is close to the other trade. It's positive 8, and we also got that negative delta. We like the positive Vega because currently Best Buy, if you look at the volatility, it's actually pretty low right now. You'll see here it's at 5%. So we expect this volatility to be increasing. A lot of room to expand volatility. And since Vega is positive here, that will be good for the trade. And so that's why we decided to do that, this trade instead. And so at 75 is our break even. So what we would be doing is, at about, if it does break 75 and isn't going the way, so this is about 75 here, right here is 75. So what we'll be doing is putting a stop loss maybe right here. If it breaks this candle here, this is the previous day drop. If it breaks this level here at 75, 76, if it goes up to 76, we will close this trade. So we'll put an alert here, close this trade if it's not going away. So it will minimize our losses, because at if it goes to 76, the loss is very minimal. And still the theta will actually still be positive. Theta will only be negative if this at the point where the purple line is actually higher than the blue line. That's when the theta will actually start to become negative. So at any time below this 76.79, theta will still be positive. So that's what we're doing with Best Buy. It is still pretty much flat and not sure where it's going to go, right? So but that's our analysis of these unusual options activity we saw on Best Buy and our trade. And yeah, if you found value in this, please give us a like. And if you haven't subscribed already, hit the bell icon also, so you'll get notified whenever we see these unusual options. All right, take care, everybody.